Asian markets are sending a message loud and clear, and Donald Trump is scrambling to control the narrative. As traders in Hong Kong, Seoul, and Shanghai brace for one of the most pivotal Federal Reserve meetings in months, Trump is publicly demanding massive interest rate cuts. But the irony is unavoidable. The very inflation blocking those cuts is rooted in his own tariff policies. This isn't just about market fluctuations, it's about a president boxed in by the consequences of his trade war. His tariffs have fueled higher prices across everyday goods, from coffee to clothing to household appliances. That inflation is exactly why the Fed has been reluctant to slash rates aggressively. Over the weekend, Trump again pressed for big cuts, but the Federal Reserve has remained cautious. Double-digit import taxes risk reigniting inflation if the Fed moves too fast, making bold cuts economically dangerous. Meanwhile, Trump's pressure campaign on the Fed has escalated beyond normal presidential influence. He's attempted to fire Fed Governor Lisa Cook over unproven allegations, while fast-tracking his own nominee, Stephen Morin, just days before the crucial decision. No president in the Fed's 112-year history has tried to remove a board member in this way. Trump is openly undermining the central bank's independence. The global markets are reflecting that instability. Hong Kong, Singapore, and Jakarta posted modest gains, but Shanghai dipped on signs of continued weakness in China's economy. Seoul hit new records only after South Korean officials scrapped plans for higher capital gains taxes, highlighting the ripple effects of Trump's unpredictable trade moves. Even close U.S. allies are shifting economic policy to brace against American volatility. Losses in Taipei, Manila, and Wellington further underscored how Trump's trade war is weighing on global markets. What was promised as a show of American strength has instead fueled uncertainty, forcing investors worldwide to tread cautiously. And Trump's desperation is becoming more glaring. While his administration pushes tariffs to squeeze China, it's also asking for Beijing's cooperation on issues like TikTok. Treasury Secretary Scott Bessent recently met Chinese Vice Premier He Liang in Madrid, covering everything from trade and TikTok to Trump's latest demand that NATO allies slapped huge tariffs on China for buying Russian oil. Instead of projecting strength, Trump's policies have left him cornered, struggling to force economic outcomes while the markets expose the chaos his trade war created.
Watching CNN News 18 makes sense. I'm Ayusha Singh. We return with a piece of breaking news. We're given to understand that US President Donald Trump has now said that he put a 50% tariff on India because they are buying oil from Russia. That's not an easy thing to do. That's a big deal and it causes a rift with India, is what he has said. Meanwhile, the United States has also told G7 countries to join them in imposing tariffs on countries purchasing oil from Russia. This is the breaking news input we are getting in for you. CNN News 18 Sanjay Suri joins us live this morning. Sanjay, very good morning to you. Trump has always been a transactional leader, but these comments coming from him despite India repeatedly defending itself, how do you see this?
The pattern exposes something far more troubling about Trump's approach to global diplomacy. While threatening India with 50% tariffs over Russian oil imports, he's simultaneously pressuring US allies to join his economic offensive. But analysts who have followed Trump's playbook recognize what's really at work: deflection. It's the illusion of being tough on Russia without ever directly challenging Putin. The contradictions are glaring. On one hand, Trump is urging allies to punish China. On the other, his administration is quietly pursuing negotiations with Beijing. This isn't nuanced strategy, it's policy chaos, driven by a president who avoids confronting Putin head-on.
Along these lines before, he has said this often, that he has placed 50% tariffs on India because India buys oil from Russia, and choking this source of income for Putin would be the way to end the war. He has also said that he wants Europe on board with a similar and simultaneous decision along the same lines. What is very clear is, and very often a lot about Trump is not very clear, but in this instance, he is very certainly seeking to deflect attention, and there are deflections at various levels here. at the start, Trump has been very, very soft on Putin. We are seeing signs of that again and again. We saw the red carpet welcome for Putin in Alaska, and then Trump refusing to sign up to or to support a ceasefire in Ukraine. He said then that the Russians may have their strategic interests which they need to pursue. Having then opposed a decision that actually would end the war, he is deflecting the attention now and diverting it to India and India's purchase of oil. And then now we have also Scott Bessent saying at the G7 finance ministers meeting that the US would like Europe to come on board. So that it's not just the US, but it's the US and Europe. And the idea is that it is the US and Europe are simultaneously pressuring India that will end the war, and nothing that Trump has to do against Putin directly. He's reluctant to take steps against Putin, and so this is his almost shadow way of trying to make a projection that he wants to do something.
Trump's
Who've
leniency
watched Trump
toward
closely
Putin has been a
understand what's
constant
really
theme of his
happening.
presidency, even
This
as
is
he
classic
threatens countries like
deflection,
India
a way to
with
appear
crippling
tough on
tariffs
Russia
for
without ever
prioritizing their own
confronting Putin
energy
directly.
security. His
Think
deflection
about the
strategy
contradiction
creates the
here.
appearance
Trump is
of resolving
demanding that
conflicts
allies
through
punish
economic
China
pressure,
while his own
while
administration
avoiding
is
any
trying to
real challenge
negotiate
to the
deals
Russian
with
leader.
Beijing.
He seems reluctant to
This
confront.
isn't strategic complexity,
Meanwhile,
it's
other nations
policy
are
chaos
already
born from
adjusting
a
to the
president who
instability his
deflects
trade
from confronting
policies have
Putin
injected
directly.
into the global economy.
Looking at in Mexico is not really negotiating a new deal, partly because Canada still has both the CUSMA agreement that includes Mexico, but also the Comprehensive and Progressive Trans-Pacific Partnership, which includes both Canada and Mexico as parties. So there's already a significant amount of market access. What we're likely to be focused on is Canada and Mexico aligning on strategy in terms of handling the American disruptions and handling bilateral trade between the two parties that are separated by this kind of buffer state of the United States, because there is still a reasonably large amount of trade that happens bilaterally between the two countries.
With the trade that does already happen between these two countries, how high would you say the stakes are for this particular meeting?
So I think for the stakes for the trading relationship, probably not the highest. Again, because there is a relatively strong relationship already between the two different free trade agreements. I think the biggest issue here is going to be how the two countries coalesce and whether or not they can agree to kind of work together in terms of negotiating with the American government, especially on the sectoral sanctions. I mean, the auto market in particular is one that is very heavily diversified between the three different countries, with one vehicle often crossing a dozen, 24 times between the three before it's completed. So I think getting aligned on autos in particular is incredibly important to the Carney government and also to the
Countries like Canada and Mexico are responding to Trump's volatility by tightening their own ties. With integrated supply chains, especially in the auto industry, where parts and vehicles cross borders multiple times during production, they recognize that stability matters more than ever. They're not chasing new trade deals. They're building resilience against the turbulence introduced by Trump's policies. The TikTok standoff is a case study in how Trump's tariff obsession sabotages his other priorities. A framework deal for TikTok was reportedly ready in April, but Trump's Liberation Day tariffs effectively froze negotiations by blocking Chinese goods altogether. Treasury Secretary Scott Bessent admitted that only the threat of shutting TikTok down entirely revived talks because the tariffs had made normal diplomacy impossible. In short, Trump manufactured a crisis, then resorted to even harsher threats to fix the problem he created. This week's Federal Reserve meeting may be the clearest test yet of Trump's economic approach. Markets are expecting a modest quarter-point cut, but Trump has demanded far deeper reductions, posting in all caps on social media that the Fed must cut rates no and bigger. That's not the voice of steady leadership, it's the cry of a president who knows his policies aren't delivering. Fed Chair Jerome Powell has been explicit. Tariff-driven inflation is tying the Fed's hands. Trump's trade war is the very reason the central bank cannot act as aggressively as he wants. And while he claims to be fighting for economic growth, his attempt to fire Fed Governor Lisa Cook shows a deeper agenda. undermining Fed independence. Cook is contesting her removal in court, with a judge granting her an injunction to keep serving. The Trump administration, meanwhile, has appealed to push her out before the rate decision. This fight isn't about allegations, it's about Trump stacking the Fed with loyalists willing to carry out his agenda regardless of consequences. The rushed confirmation of Stephen Moran days before the meeting underscores the desperation. Moran, still technically a White House staffer on leave, immediately sided with Trump's push for a larger half-point cut. That blurs the line between independent policymaking and presidential pressure, raising concerns about conflicts of interest and central bank credibility. The economic data tells the real story Trump avoids. Unemployment rose to 4.3% in August, the highest since 2021, and job creation has flatlined, with revisions showing nearly 1 million fewer jobs than initially reported. Instead of the booming economy tariffs were supposed to deliver, Americans are facing stagnation, uncertainty, and higher costs. China hasn't stood idle. Beijing has retaliated with investigations into the US semiconductor sector and antitrust claims against Nvidia, while denouncing Trump's call for NATO countries to impose tariffs on China as unilateral bullying. This tit-for-tat cycle is exactly what trade experts warned about, and it's US consumers and companies who are paying the price. The bigger picture is hard to ignore. Asian markets, fluctuating ahead of the Fed decision, reflect global uncertainty about US economic leadership. Trump's promises of strength have given way to inflation, higher costs, and unpredictability. His tariffs have boxed in monetary policy, his attacks on the Fed have rattled institutions, and his erratic diplomacy has unsettled allies. Friday's scheduled call with Chinese President Xi Jinping may offer Trump a chance to claim a diplomatic win if TikTok talks progress. But the truth is stark. Any breakthrough will come only after months of chaos that Trump himself created. This isn't the art of the deal, it's the art of engineering crisis and then seeking credit for partial resolutions. The irony is unavoidable. Trump's own policies are blocking the very economic boom he craves. Tariffs have fueled the inflation that prevents rate cuts. His interference with the Fed has sown mistrust among investors. His unpredictability has left global markets on edge. What he promised as a pathway to American greatness has instead delivered volatility, uncertainty, and mounting costs for families and businesses. As Asian markets watch, the Fed deliberates, and global leaders brace for his next move, one conclusion is clear: Trump's brand of economic nationalism is leaving the US and the world less secure, less prosperous, and more vulnerable.